December 9, 2023, we hosted our first Grow Nation event, and the keynote speaker was Canadian in a t-shirt. And we have a very short history, but a very effective one. I met Adrian on a walk in Waterloo, and from there to doing a podcast to all the way to share a stage with him at our very first event. This video is a 20-minute clip from a long interview that we had at the event.
Thank you so much for having me here. Like you said, I bumped into you randomly on a walk. 2 weeks later, I joined your podcast. It was my very first podcast. Here we are a couple months later, sharing the stage with you is such a pleasure, such an honor. Thank you so much. I'm really excited to be here.
Thank you so much, Adrian. Now, I would love for the audience to ask questions, but because we have a pretty massive, amazing audience, we'll not do that because I've tried it once, we failed, and that's why I have questions. So, Adrian, first of all, why did you start your YouTube channel? Why YouTube?
Right, okay, so the story of how I started YouTube was actually with my last job. I worked as an AI engineer for several years, and I led various AI projects. And one of the parts of my job was I was responsible for hiring anywhere from 15 to 20 co-op students every semester. And what I'd like to do was, on a weekly basis, I would kind of teach these co-op students kind of the basics of career skills, things like how to write a resume, how to interview properly. But I also taught them a lot of financial information, things like how taxes work, how credit cards works, what's the basics of investing. And these students ate it up. They loved this stuff. Because no one had ever taught them these things. So every semester, every couple of months, new students would come in, and I kind of realized I'm kind of giving the same speech again and again. So instead of repeating myself with one-on-one presentations every month, why not kind of immortalize these lessons in video format? And I said, if I'm going to make videos anyway, why not put them on YouTube? So that's what I did, purely as a hobby. I never expected to make money off it. I never expected anyone other than my family and friends to listen to my videos, right? But months went by, years went by, my videos started to gain some traction, and it got to the point where now this became my full-time career. All the way to this point where now I'm able to sit here on the stage with you and share my lessons, share my quote-unquote wisdom with anyone who will listen to me. And I'm very honored and very, very grateful that so many people trust me and trust what I have to say. It's been an amazing journey, and I can't wait to see where we go from here.
Amazing, amazing. It's really humble of you, and I really find you energetic and equally humble. To admit, and you're amazing, man.
Thank you.
I'll talk about investing now because there are so many investing-related questions. So I'll.
Let's do it.
So can you retire by just investing in the stock market, or real estate investing is critical to retirement?
So, you don't need stocks to retire, and you don't need real estate, but they are both very, very powerful tools, and you should use all the tools at your disposal, right? When it comes to life, this isn't just true for investing. With anything in life, it's very rarely one clear-cut winner, right? There's very rarely a black and white answer. You can do a mix of both. You can always do a hybrid approach. That's what I do, right? For me, I love stocks. I love how accessible they are. I love how it's such a low barrier to entry. Even with as little as $50, you can invest in some of the biggest companies in the world and gain a portion of those profits, right? If you invest in Apple stock, now you have tens of thousands of employees working day and night around the world to make you money, and you don't have to do anything. I love that about stocks. But on real estate, you can't deny there's undeniable benefits that you only get from real estate that you won't get from stocks, right? I mean, just look at the historical consistency. Historically speaking, real estate is one of the most reliable wealth-building assets in Canada, around the world, right? But also, I'm sure we're going to talk about this later today because we have a lot of real estate-focused experts on stage. But you get the power of leverage with real estate. You don't really get that with stocks. I mean, I don't know how stressed we are with time, but like real quick, just kind of illustrate the example of this is, let's say I invest $20,000 into Apple stock and I double my money, right? Great, I buy for 20K, sell for 40K. I've made a $20,000 profit, wonderful. If I do the same thing with real estate, I put in 20K, and then I buy a $100,000 house. So I put in 20K, the bank puts in 80K. So the bank puts in way more money, 4 times more money than I do. But if the house doubles in value and I sell the house, I gain 100% of the profits, even though I only put in 20% of the initial money, right? So in that situation, if I put 20K into a house, it doubles in value, and I sell the house, after I pay off the mortgage and anything, I'm left with 100K profit. So like that's a very simplified example. Obviously, there's way more things to consider than that, but I just really want to illustrate the power of leverage. With stocks, unless you do more advanced risky techniques like margin and whatnot, right? But generally speaking, with stock market, you can only really gain money off the money you put in. With real estate, you gain money off of your money and the bank's money. And that is an incredibly powerful tool. And I really can't overstate that.
So I have a very difficult question now. If you were to choose one thing, stock market or real estate, what would you choose?
That's so hard to pick. I mean, the true answer is you shouldn't pick just one, but if I had to, I mean, in my personal experience, real estate, even though as much as I love stocks, and I talk about stocks all the time on YouTube.
I was not expecting that.
No, real estate is the fundamental backbone of my long-term wealth building strategy, right? Like, I've made some great profits in stocks, and I will continue to buy stocks for the rest of my life, but no question, I have more money in real estate, and I've made more money in real estate, even in a smaller amount of time. So, if I had to pick one, real estate. But of course, you know, there's a higher barrier to entry. It's hard to get started with real estate, but if you can, and you're smart, and you have the long-term mindset, I really encourage it. And talk to people like Nav. You know, they've done it all, and they can definitely help you get started with it.
That's amazing, man. How do I know when to sell stocks? I actually found this very interesting. I had a lot of questions, right? But I picked the ones that I thought that will add value. So how do I know when to sell a stock?
Right. So for me, there's only really 2 reasons I should ever sell a stock. One is if my personal situation or my personal circumstances change and I need the money. Or 2, if the situation or the circumstances of the company fundamentally changes, right? So let's break that down. Like, so if, you know, ideally, when you invest money in the stock market, that should be money you set aside and you will not touch for 3 years, 5 years, 10 years, 20 years. The longer, the better, right? But eventually it's going to come to the point where maybe you do need the money. Maybe, you know, you've been saving up for a down payment, and now you need that money for the down payment. Maybe you need to send your kids to school. Maybe it's time to retire. If you need the money, then it's your money. You're allowed to sell the stocks. That's what it's there for, right? That's why you put the money aside, so you can invest today and get more money in the future. So if you need the money, sell the stocks, hopefully for a profit. And then number 2, if your outlook, if your conviction and the fundamental future of the company changes, then you have a difficult decision. You might think, okay, do I think this company will recover? If so, maybe hold on to it. But if you think, okay, I don't see a long-term future of this company anymore, maybe the company's in the green, but I think it's going to start going downturn, you might want to cash out and put your money elsewhere. That's a tough call to make. It sucks being forced to sell. It sucks being forced to sell at a loss. But sometimes it's better to cut your losses and salvage what you can, right? Even it doesn't matter how much the company used to be worth. If it goes to 0, whether you own 10 stocks or 1,000 stocks, you're left with 0, right? So you really have to kind of be honest with yourself and decide what you think you're going to do. And if you don't believe in the future of the company anymore, maybe you have to sell.
Buying a cash-flowing investment property or investing in your skills to start a business?
Wow. Okay. So that's an interesting question, because the way I see it, when you invest in a rental property, you are in effect starting a business, right? The way I look at it, every single rental property I've ever bought with either myself individually or with my brother, I partner with my brother, we treat it as a business, right? And for the first maybe 1, 2, maybe even 3 months of researching the house, you know, doing the offer, running the numbers, buying it, renovating it, screening tenants, you're gonna be working like almost every day on it. It's gonna feel like a second job. It's gonna feel like a business. That being said, if you find quality tenants, and then, again, there's many real estate strategies, but I'm talking more for like a traditional kind of long-term buy and hold rental property, eventually it becomes kind of an autopilot, passive income at that point. And so the thing I really love about real estate is that, yes, it does take some time at first, and obviously there's going to be, every once in a while, like repairs, a toilet needs to be fixed, whatever, right? But that's not all that onerous on you. But the good thing is that almost anybody can get started with real estate, and anyone can really get started with a rental property. When it comes to starting an actual business, that's definitely not for everybody, right? Like, it has to be something. First of all, if you want to start a business, you have to genuinely be passionate about this. You have to really love what you're doing, what value you're providing to the customer. If you're just doing it to make money, you're probably going to be disappointed, because most businesses will not earn a profit for the first year and a half, maybe even 2 years, maybe not ever, right? And another thing is that you really do have to kind of sit down and self-reflect and really kind of just, face the reality of your personality, how you deal with stress. Not everybody can handle the sacrifices that come with running a business, right? And again, maybe some of those things might be out of your control. I'm a serial entrepreneur. I've started many businesses over my career, but it's kind of easier for me because I'm a young guy, I'm independent, I don't have family or kids relying on me. But if you have a family, you have kids, starting a business is a huge level of stress that you're placing on yourself and your family. So it makes it a lot harder. And you have to really be honest with yourself. Are you willing to kind of make those sacrifices? Give up weekends, give up evenings, give up nights when all your friends want to go out and party. You're gonna have to sacrifice relationships. You're gonna have to sacrifice friendships. You have to really face the facts. Starting a business is blood, sweat, and tears. And hopefully, if you're persistent and maybe with a little bit of luck, it might work out and then eventually become more of a self-sustaining operation. But for the first couple of years, running a business is brutal. And anyone who's done it will tell you the same thing. So that being said, I would say, long story short, I hope everyone is in the chance where they can try to do both. But I would say this, starting with real estate, with a rental property, almost anyone can do it. Starting a business, it's not for everybody. So really kind of take the time to do some self-reflection and decide, is this something that I'm willing to do? And if the answer is no, that's fine. You don't have to be an entrepreneur, right? You can build an amazing long-term wealth portfolio by working a full-time job, by doing real estate, by doing stock market investing, by doing anything, right? There's so many avenues to generating wealth. But if you have that itch that you need to scratch to start a business, you have that idea, and that you won't rest unless you at least give that idea a shot, then go for it. But do it with both eyes open and be aware of the risks and the sacrifices that will be needed.
And I always tell people, and I think this is a question that a lot of people will have, that should I leave my job and start a business? I truly believe that you don't have to do that.
Right.
You don't have to go all in.
Right.
You can do it parallelly, but yes, you will make sacrifices while doing that, right? So I think that's very important for anyone who's starting a business here. I'll just wrap up with two questions now. Is there a book that you would recommend everyone to read here, and it cannot be reached at Word at? Or Psychology of Money?
Oh, which one?
Psychology of Money.
Oh, okay. Nice. No, both great choices. Robert Kiyosaki. I mean, you talk to any entrepreneur, right? They will tell you Rich Dad, Poor Dad was an eye-opening book for them. But there are so many other books out there. I'm going to give you two examples. One is actually a historical classic. It's called The Richest Man in Babylon. This book was written about 100 years ago. And it's still so relevant today. And the reason why I love this book is not very technical. It's not one of those, Benjamin Graham, Intelligent Investors. It's not one of those books where you have to kind of reread the chapters again and again and kind of do the math on the side just to kind of make sense of it. It really does do a great job of just kind of illustrating and cementing these lifelong, immortal pieces of wisdom told through the lens of ancient Babylon, right? Like a civilization back 2,000 years ago. And it's funny because they tell these really important nuggets of wisdom, things like, buying assets, not liabilities, investing in yourself first by putting 10% of your income every time you earn income into investments. All these kind of like immortal pieces of wisdom, they teach these lessons in a very digestible and entertaining way because they tell it through a bunch of different stories set in Babylonian times, whether it's a rich sheep merchant, whether it's like a prince, whether it's a poor farmer. Each chapter is like a different story and highlighting a different aspect of building wealth. So for me, I loved it because it was a genuinely entertaining read, and I actually learned some really great fundamental nuggets of wisdom there. Another one I definitely recommend is a more recent book called Beat the Bank by Larry Bates. That book is basically all about mutual funds and the cost of paying those very high management fees, right? Because historically speaking, for decades, the running narrative in Canada was investing is so dangerous, it's so scary. You're not smart enough to do it by yourself. Trust the banks, right? Give the money to them, and then they'll manage your portfolio for you, and they'll only take a little bit of fees, right? If you really look at the numbers, and again, I'm not saying that all fund managers aren't worth the money. There's definitely some that are, right? But it's important to understand what you're really paying for and what the fees come associated with that. And I think Beat the Bank by Larry Bates does a really, really good job of kind of illustrating the long-term benefits, the long-term impacts that significant fees can have on your overall portfolio, right? In the short term, might not make a big difference, but over 20, 30 years, it could be like 30% of your portfolio. So I really like that book because it really does it was definitely eye-opening, and I think most Canadians, especially Canadians who don't really take charge of their own financial future. They just blindly trust the bank to manage their money for them. Give this book a chance, right? And then maybe it'll convince you to do more self-directed investing, or maybe switch a portion of it. That's fine. You can always do a hybrid approach. But I'd say bottom line is that it's very important to understand what you're paying for and what the fees are, and hopefully you're getting value out of that. If not, it might be time for a change.
This one is not my favorite question because it's very individual. But what would be your top 5 stocks? And it's not advice, but for yourself, what would be the top 5 stocks?
Okay, so...
You can't say ETFs.
I can't say what?
You can't say ETFs.
Oh, okay. No ETFs, no cheating there. Okay, so if you guys follow me on YouTube or if you follow me on Blossom Social, the CEO of Blossom, Max, is going to be joining us on stage in a little bit. Definitely follow me on Blossom. It's an amazing social app for Canadian investors. And the great thing about that is you can follow me on Blossom for free, and you can see exactly what I'm invested in. And if you'll see, I own way more than 5 stocks. I've probably got, I don't even know, maybe 30, 40 individual stocks plus ETFs. So now you're asking me to narrow down to 5, which is very hard to do.
Thank you so much, Adrian. This was
you.
amazing. Adrian Bar, guys. Canadian in a t-shirt. I love this guy. Thank you so much, Adrian.